Okay, today I want to discuss very quickly the COT data on silver. And the reason I'm doing this is that since I took note around a year back that gold and silver probably made their long-term bottoms and started into a bull market, essentially because gold has made an ending diagonal pattern down to the 1050 level, and so from there I started calling this as a long-term reversal a year back, and I've been tracking it since. But what happened is that moment that move started a year back, when we started to see gold head higher, a lot of reports came in, especially people started calling in and talking about the commitment of traders report, and especially because silver in particular had very high long to short positions developing, basically meaning that the total open interest in the derivatives market, the futures market, had gone to near records. So it took some time to understand the move actually continued higher despite the data. The data did lead to a correction at some points of time, but the point is that was it possible to really look at any particular level on the data and say that, yeah, this is the point at which you get an indication that the market's going to correct? And the answer to that would probably be no, because these silver prices, despite correcting a bit, continued to make new highs all the way into August of last year. And so that was months and months after data appeared to be high. So the simple thing to do was you can go online, search. There are a couple of websites that show you the COT data, and I'm looking at one of them, which for some reason has stopped updating it. But the good part is you have history here going all the way back to 1999, which means the previous bull market, how it started and what the data looked like. And so I'm looking at silver COT data, which is starting from 2001, and you can see from this very low position level here, where there were almost no positions on silver. You saw a huge expansion in the positions. Just look at the black data instead of looking at everything. And when you see that this huge built up into a new record high took place when the first rally in silver actually took place. When prices went from almost around, I think, 4 to 4, from around, yeah, 4 to 4 point, to almost $5. So that was like a 25% kind of move. And when we got that, you ended up seeing positions go to a record. What is also interesting is that as we see each rally and each high, you got a new high in the data. So if you say this initial small little rally here, and I'm sorry about this jumping box, it's just how this particular software is. If you look at it, you see that the data started to rise, and shorts, longs, and shorts got built up. But there was no particular level at which to see a correction, and after correction they got built up even more and even more. And this pattern essentially continued throughout the bull market. So you can see one of the most powerful rallies that occurred here in between, when silver went from 4.75 all the way to 8.25, and positions just remained high. They corrected a bit in between, then again went to a new record high. So if you really looked at the new records and thought that prices will drop a lot, at some point they did give you a correction, but eventually kept going up much more, and you would have really missed the entire move. So probably that's not the way to look at this data. In fact, the way I would look at it is that the high reading tells you a lot about the interest in the contract, rather than whether it's telling you top or bottom. Yes, if you have these positions in combination with sentiment, in combination with your Elliott wave structure, if they are telling you something, then you probably give it much more weight. But standalone, looking at the data doesn't tell you much. And so that brings me to I'm sorry. That brings me to the most current data piece. Let me even zoom in. This is all weekly data, so you're looking at weekly charts. So if you just zoom in, look at silver, what it did last year, and you see positions throughout rising all the way for 6 to 8 months, and at each level, once it had crossed this point, looked like positions are too high, and prices corrected a bit, and then again rallied to a new high. And so uh, that's probably the inappropriate way to look at it. And the same has happened this year. So after this deep correction that we saw into December, the first rally seen huge positions build back. And I'm switching now to another website which has more updated data on this. So you notice that once the bull market was over, in fact, in the last stages of the previous bull market, you saw positions actually come down significantly, meaningfully lower to a much lower reading, and then they've actually expanded at the right end. So I'm just zooming into what happened at the low end. In fact, as prices entered the final stages of this bear market, you've seen positions expand dramatically. And at each bottom, you saw this high reading, this blue line reaching, close to this 21 mark in terms of, 18, around 160. I think it says 162 is the open interest. So every time you got to 162, you saw prices stop and sell off. But if you actually used that out here, you'd probably have missed the next move, because eventually positions went to 198, then prices dipped a bit, then they went to 224, and today positions are still at 208. Now, as these positions reached this same high as we saw in August, when silver prices actually topped and corrected. Now let's zoom into that and see it. Uh, then too, you did get a correction, but after that, once again, prices seem to be holding up. So the point of this analysis is that you can't look standalone at the build-up in positions. In fact, this record build-up that we are seeing here, just like at the start of the previous bull market, would essentially be signature to the possibility that you really started something which is far more bullish, which is why people are interested. The high and low readings should only be studied in combination with sentiment and Elliott wave analysis. That's all in this update. Thank you.